Okay, so I think that we are recording. Hi, my name is Hannah Demuth. I am a commercial broker with McGraw, and I have got my friend Daniel here. Daniel is the executive vice president of Price Family Properties. And Daniel, obviously, I have the pleasure of knowing you, but tell everyone just a quick little 60-second, 30-second little infomercial about you.
Sure. So Daniel Regan, Executive Vice President, Price Family Properties, like you said. I've been with the firm since they started and took over buying out a portfolio that was previously owned by Cambar Properties. Have been fortunate to work in the downtown commercial market for 6 years now and have seen some significant changes since the beginning. Really started at the bottom of the totem pole here in property management and have worked my way up in this team to be one of the executives, and just really excited to be here with you today and talking a little bit about the market in Tulsa.
Awesome. Well, it's kind of the crystal ball question that I get asked all the time. So I love to push it back onto others. How is the office market doing? And how is the office market in downtown specifically doing?
Sure. Yeah. As you know, we have a little over 2 million square feet of commercial real estate in the downtown market specifically. And so, highly concentrated to that market. And it's been interesting, obviously with COVID and everything, everybody, kind of takes a pause, reassesses. I will say, fortunately, we are at about 100,000 square feet of new leases so far this year. So for us, that's pretty on target. We tend to do about 200,000 square feet of new leases every year. And so, we've got big old goals and we try hard to accomplish them. And I will say, candidly, I was a little nervous come March when everything started to shut down that we were going to be able to stay on track, and we have. So I've felt very fortunate about some of the larger office deals that we've been able to accomplish this year. And going forward, actually still a little bit optimistic, even considering that the pipeline may not be as big, but the deals are still there, and some of those deals are very big. So, for example, we've got RFPs and have locked space for another 200,000 square feet of office tenants already that are looking to take space, end of this year, early next year. So for us, that's a pretty solid pipeline. Now that may be a handful of tenant leads. It's not like there's dozens and dozens of tenant leads, which historically has been our case. We'll get a 5 or 10 or 2,000 square feet, or maybe even an occasional 50, 60,000 square foot lead. So these are tending to be larger leads. And I think for us, what I'm seeing, if I could look into the crystal ball, which I can't, but I'll just pretend like I can, what I'm seeing is that there's opportunity in the market for established companies that are looking to right size or be efficient in cost going forward. And so I'm thankful that we aren't top of the market pricing. We've got Class A facilities, but we aren't trying to push to be highest price in market. And I think that gives us opportunity to position to pick up as existing or new tenants are looking to right size or adjust their expectations going forward.
Yeah, definitely. And I think the really great thing about Price Family Properties is your guys' portfolio is not only commercial based, but it's also residential based. So tell us a little bit about the residential side of your portfolio, how that is doing.
Sure. So we don't sell our residential. It's all leased apartments, and it's been consistently strong. I mean, I think especially, and I think this will be the case as you see some of the economic impact hit, and maybe even despite record low interest rates, folks not having financials to back up purchasing, you'll see the rental market continue to be strong. And so I anticipate that leasing out on residential for us, multifamily, is going to continue to be strong. And, we are, and previous to the economic downturn, we're already looking towards affordable housing options. Right now, we've got kind of a mid-level, we've got a higher end, and our next project that we'll be completing at the Oil Capital building at 507 South Main will be a affordable housing project with 48 units, priced around $500 to $600 a month, which for downtown and really for Tulsa is a very affordable unit price. So I think you'll see more of that, and that'll fill in the downtown area as the city of Tulsa's downtown housing strategy continues to roll out. But it's for us, I don't see any slowdown in the rental market, and I think there's a lot of factors in that, from Tulsa remote to economy to again, still just a strong desire to be in and around the downtown vibrancy.
Awesome. Now, are you seeing more growth on the residential side or on the commercial side? Is it a mix of both? What are you seeing out there?
I would say it's equal. Maybe there's a little bit more, and again, it's not apples to apples. On the commercial side, I'm talking 30,000, 100,000, 60,000, 50,000 square foot prospects, and those lead development times, as you know, Hannah, take time. I mean, those deals don't happen overnight. On the residential, you're talking a $1,000 a month or a $1,500 a month or a $700 a month rental unit that somebody's doing on a 12-month lease, and those develop very quickly, and so you're going to have a lot more prospects for those coming in, and your pipeline will be bigger. But obviously the economic impact is felt a lot more dramatically on a multi-year large office tenant use. So different scenarios. I would say we do get more residential inquiries than we do office, but the office ones just take longer and they have bigger impacts. So that's just the nature of the business, really.
And obviously, since you are on the landlord side and you represent a really great family that has some really strong spaces in downtown, what have landlords started to look for that might be different than before COVID? Things like rentals or maybe a personal guarantee. And this would be for on the commercial side, commercial leasing.
Sure. Well, some of that is deal specific. If a tenant expects for a landlord to put a lot of capital into an existing structure or facility, and for us, with buildings that have been standing for a long time that are stabilized already at 85%, 90% occupancy, we're pretty secure in our position. We aren't a speculative purchase of a new building looking to cover a note. So we've got a unique position in that we can be a little more flexible. However, that said, anytime somebody is going to expect tenant improvement contribution from the landlord side, where they want us to put in capital to improve the space to make it their specification, that's going to require some stronger financials and certainly guarantees in lieu of that. And so that would be a typical kind of scenario where we would expect that. But if somebody's able, and again, we're fortunate by way of having 2 million square feet of space and hundreds of thousands of square feet of opportunity to fill with everything from a small tenant to a large tenant. And so in a scenario where somebody's taking a space that substantially works already for them, we don't have to be as stringent on our financial requirements for that group. But obviously, somebody that comes in that has strong financials, that is willing to give personal guarantees, that's going to give them a leg up in this market. But again, I feel very fortunate in our position that we can be flexible and work with folks that are entrepreneurs, or recently I was calling on oil and gas industry executives because just because they got furloughed or laid off or their firm isn't doing well now doesn't mean that they're not going to still want to work for the next 10 to 20 years and build something up as the economy picks back up. So for those types of individuals, even though they don't have something immediately, we reached out and said, if you want just a place to sit down, have a desk, have a place to work from, and build your next venture, let us be your partner in that, and we'll start with you at the bottom and help you grow to fill the entire building over time. But I feel very fortunate that we aren't as restrained in some of that financial obligation from a tenant perspective.
No, I think that's great perspective. And my favorite phrase that I use in commercial leasing is every deal is different. Every need is different. And so many times when people call and ask me a broker for specific things, I say, let's talk to the landlord first, see what they're needing, see what they can do, and then go from there. Because I'm sure every single thing is different. Your two deals are ever the same.
Yep, exactly right.
Now, last question. Tell me what's on the horizon for Price Family Properties.
Well, I kind of hinted we're doing a residential conversion. I'm super excited because I feel a little bit like I play Monopoly sometimes in the downtown market, where we have retail spots that are really amazing spots, and obviously the retail market's taken a pretty hard hit this year, and we don't have a significant portion of our portfolio that is that. But in our retail locations that we do have, I'm able to go out and really seek the kind of tenant that would be value add for the neighborhood. And so just in the last week, we've added as new, or not least last week, last month, I would say, new to the market this year, a new brewery called Erie Abbey Ales, a new Vietnamese restaurant in downtown, which we've never had a Vietnamese restaurant in downtown, called Kai Viet Fusion, And so having them here and then building residency and office use around that retail vibrancy, pretty exciting. So going to continue to work on the few, and we've only got a few spots left that are retail, and make sure that there's a good fit there for the neighborhood in that retail use, but also looking towards residential and infill. And as I mentioned, the Oil Capital building, we'll be doing that project. We've got two other buildings post completion of that project that we'll be doing that are residential. And so I think over the next 2 years, you'll continue to see residential infill in downtown, something that the city's really been pushing for, and especially towards affordable housing, things that are more workforce housing. And so we'll continue to help fill that role. We do have some speculative plans that are new build projects. We've got some great surface lots that don't necessarily need to be surface lots. They work well for parking at the time, but I think over the long term, you'll see new developments go on those, and you'll see continue vibrancy and infill of the downtown office market. So very excited that we've worked on some of the parking bottlenecks that we had over the last few years. As you know, we built a new, I think, $20 million roughly dollar garage here attached to the First Place Tower building. Arvest, we partnered with them on their new garage over on 5th and Boulder. And so as some of that infill of parking has happened, you're seeing backfill of residential to meet that demand. And I think we'll continue to see the office market be strong, even if it does shift some and maybe go away from more of an open concept to something that provides more social distancing, closed wall office. Not to say that everything's going to go away from open, but I do think some of the larger groups are looking at how their office mix and layout works and what is most effective for them going forward. And so I think that'll, again, continue to have impact on the office market, but I don't know that it'll be negative impact. It just means that it'll look different.
Definitely. I think that's a really great point. I don't think it's going to be super negative or really even super positive. I just think it's going to be a different impact. And I think we'll be able to see, like you mentioned, in the next 6 to 12 months, a change happen. I still think you're going to have it be busy. I still think you're going to have activity and applications and leads, but it's just going to be a different mix that we might not have seen before.
Yep. Yep.
Now, obviously, thank you so much for your time. If people wanted to get a hold of you or see what listings Price Family Properties has available, what is the best way to do that?
So you can reach out to me on my cell. Happy to give it out. It's 918-282-8711. You can email me, Daniel@pfptulsa.com. That's Daniel at P as in Price, F as in Family, P as in Properties, Tulsa.com. And I would highly encourage anybody to go check out our website. We've got a great website. A little shout out to Resolute PR. They're one of our tenants, and they did a great job on that website and our logo, and have won some awards on the work they did. So pfptulsa.com if you want to go check us out. Always happy to do a tour. We're a 24/7 operation. So nights, weekends, days, doesn't matter to us. We're here, and would love to be a part of your team.
Awesome. Thank you guys. Well, thank you guys. Thank you, Daniel, so much. And I hope you have a great weekend and stay safe.
Thanks, Hannah. You too. Bye-bye.